Assalamualaikum and hi to everyone. Today we want to present about Aeon and Tesco Financial Analysis and Projection Report. So our group member is me, RUBIYATUL BINTI KAMARUDIN, Alya Qasrina, SYAIDATUL SHAFINA, ELVIRA, dan SITI HAJAR.
Let me introduce our first company background. Aeon Malaysia is a leading retail and lifestyle company that has been offering department stores, supermarket, and shopping mall across the country. As a part of Japanese Aeon Group, Aeon Malaysia offers a wide range of high-quality products and service from groceries and clothing to electronic and home goods.
Tesco was founded in 1919 in UK by Sir Jack Cohen. Tesco will serve their customer with a promise to improve a little bit every day. There are a lot of categories shopper, such as online shopper in Tesco.
So today I'm going to talk about how liquid the organization. There are two ways to measure it, which is by current ratio and quit ratio. For the current ratio, show that Aeon have slowly increased their rate for the past 3 years, but is still below than Tesco. Although in 2021, Tesco rate have decreased, but managed to increase again in 2022 because they managed to reduce their current debt and improve their credit rating. For a quit ratio, show that Aeon have increased their rate in 2021 and remain same for 2022. This is show that they are only depend on inventory. But Tesco show that their rate are better than Aeon because they managed to reduce current debt and inventory and also increase their current asset.
Okay, now let's see which company is more efficient in converting receivable to cash and inventory to profit. I will using day in receivable and account receivable turnover ratios to compare both of the company. For day in receivable, Aeon improved in 2020 and slowed down to 6 days in 2022, showing improvement in collecting payment from customers. Tesco, on the other hand, show consistent efficiency with remaining stable at around 2.7 days. In terms of account receivable turnover, Aeon improved and increasing years by years, while Tesco maintained strong results with their consistent turnover, proving their efficiency in receivable management. Okay, let's take a look of this ratio. For day in inventory, Aeon slightly improved by years but still not enough than Tesco, while Tesco maintained an outstanding performance by staying consistently low at around 18 to 19 days, meaning they have an efficient stock movement. Lastly, in inventory turnover, Aeon is stable with turnover around 3.9 times annually, while Tesco maintaining turnover between 19.83 and 19.29 time over the same period. Overall, Tesco able to quickly collect receivable and manage inventory compared to Aeon.
To find operating return on asset ratio, we can divide operating profit with total asset, and to find operating profit margin ratio, we can divide operating profit with sale. For operating return on asset ratio, Aeon have a better performance compared to Tesco because Aeon have a better inventory management. For operating profit margin ratio, Aeon has a better performance compared to Tesco. This is due to Aeon have a lower operational cost.
The managers generating and allocates operating profit by their organization assets. Total assets turnover was used to measure how efficiently a company uses its asset to generate revenue and is calculated as sales divided by total sales. We also use fixed asset turnover ratio, which is asset divided by net fixed asset. Tesco constantly higher asset turnover ratio demonstrate its more efficient use of asset and to generate revenue. While Aeon, although improving in 2022, remains less efficient in comparison. The higher asset turnover ratio generally indicates better operational efficiency. We also use fixed asset turnover ratio to measure how efficiently a company uses its net fixed asset to generate sales. Tesco maintains strong efficiency over the 3 years, consistently generating RM 65 in sales for every ringgit of fixed asset. For Aeon, sales decreased in 2021 reflecting reduced efficiency but improved significantly in 2022 due to Malaysia reopening its economy, allowing customers to return to physical store.
So next, how were the organization financing their asset? So we have two ratio, which is debt ratio and time interest earned ratio, TIE. Debt ratio is for measure the proportion of a company's total asset that are financed by total debt. High debt ratio means the company have higher risk to pay their debt. Next, time interest earned is for measure a company's ability to meet its interest obligation. Higher times interest earned means the company has a strong ability to pay their interest. Based on the table, we can see Aeon is more better in financing their asset than Tesco from 2020 until 2022. Both have shown good progress year by year. For time interest earned, based on the table, we can see that Tesco is more better than Aeon from 2020 until 2022. Aeon have shown good progress year by year, but time interest earned for Tesco is decreased from 2020 until 2021, but increased again in 2022.
Are the firm's managers providing a good return on the capital provided by the company's shareholder? To evaluate this, we analyze whether Aeon and Tesco's managers are generating good returns by calculating the return on equity (ROE), which is defined as net income divided by total common equity. The comparison between Aeon and Tesco from 2020 to 2022 is shown in the table below. Tesco constantly delivers a higher ROE across all 3 years, indicating better returns for shareholders relative to their equity. Aeon's ROE show improvement over the year, rising from 2.48% in 2020 to 6.16% in 2022. However, Tesco's ROE growth was more substantial.
In conclusion, we all think that Tesco is the one we will invest in because it has higher liquidity, higher efficiency, and higher return on equity. And we believe that we will get a higher return if we invest in this company.